Hello everyone and welcome to the video. Today we're going to be talking about the market outlook for March 24th through 28th of 2025 this coming week. It's a brief overview of this coming week's focus on our technical analysis on the charts and our economic indicators and major earning reports that are coming up this week. So I'll briefly go through that with you now. For technical analysis, let's look at the charts to get a better idea of where we're going to be starting the week at. So we'll look at NQ, MNQ, ES, MES, maybe the dollar, maybe the VIX. So go into that right now. Start off on the monthly chart for MNQ. Remove all indicators and drawings to start fresh and clean. Currently, we are seeing a downtrend on the monthly for MNQ. And really, we don't need to do NQ with this. It's all the same. So here we can just do NQ. And then same thing. So down over 5% on the month. Continuing this downtrend. Bearish on the month. The weekly. Continuing this bearish downtrend of 5 consecutive red weeks in a row. We did not make new lows for the first week, though, so that is interesting to see. Maybe buyers are finally starting to step up here. Maybe there was a difference with the rollover in contracts. You never know. Volatility gets weird with rollover. So something to consider, though, that we don't have new lows on last week's compared to the prior week. So this low was 19,345 and a quarter. This low 19,550 and a half. So that's what I'm talking about there. On the daily, we can see this consolidation ever since the sell-off. We bounced and have just been kind of consolidating in this tight range here. So it is something to consider. Going into the week, are we going to finally get out of this range? It has been a pretty large range, so I will say, like, you know, you can still get decent moves out of it, but it has been rougher to trade choppy activity. It's much cleaner when you have like big moves like this or to the upside. Personally, if we do get out of this range, I would not be surprised to see a move up to here. This would be like the next levels that I would want to see. So just kind of an idea. If we do get out of this 20,200 zone, we could probably pop to 20,400 pretty quickly. But yeah, we'll keep diving down. And now we are in that 4-hour time frame here. What we are seeing in the 4-hour time frame is we're still in, we can see this consolidated zone over here that we're monitoring. But what you can also see is that we've had this double bottom here, or equal lows, some might say, of 19,602, 19,604. Pretty much the same here. And then we shot up off of that. And we've never traded above the high from when FOMC came out, which I believe was March 19th. I believe this was the high from FOMC. So I'm guessing the high of FOMC is going to get run at some point in this coming week with this bullish kind of structure going in, where we had those equal lows, shot up off of it, broke above the prior candle's high, had a new 4-hour candle, lower low, higher low, higher high, as you can see that there. It definitely indicates that, we could be coming for this target up here. And then I wouldn't be surprised if maybe we bounce off of it and snap back into the range. But that's kind of what I'm seeing there on the 4-hour. We'll check out the 1-hour, see that continued push up. Got this bullish engulfing 1-hour candle here, which and then we just kind of pressed right up into here. So it's definitely, in my eyes, probably going to target the high of FOMC sometime this week. I will be cautious of this range, though, maybe trying to play the lower portion of the range. So 50% is 19,750, and then anything under there, it would be an ideal area to maybe consider entering for a push up to those highs. But yeah, we'll continue moving on to the ES here. Going to the ES now. It's probably going to look fairly similar. We're going to zoom out again to the monthly, and then we'll just clear everything off of here. We have a down over 4% on the monthly, lower lows, lower highs, very similar formations. Go down to the weekly. This one has had only 4 weeks of consistent selling off compared to the NASDAQ, and then which the NASDAQ had 5. And then we also see something similar here where we didn't make a new low. We had an inside week, inside candle, but we didn't make a new high. This one did close bullish, so it did close. I wouldn't necessarily say bullish, but I would say it closed higher than its opening price, but it didn't break above the high of the previous candle. So to me, that's not very confident in bullish yet. It is more signs of consolidation. We might see a small breakout or some continued chop. And again, we did have rollover, so this could be similar reasoning because of that. And then we'll go down the 4-hour. Sorry, on the daily here, went a little too quick there. We did break below the prior candle's low, and we didn't break a new high, so that is consolidating, and it is trending still to the downside, but it's not super bearish. And then when we go to the 4-hour, very similar setups that I'm seeing on the NASDAQ. So we can see we had those equal lows around 5,651 and 5,650.75. And it was 51.25. So it was literally 2 ticks away. And then we shot up, broke the prior candle's high on the 4-hour, new 4-hour candle, higher high, higher low, continuation. Still haven't taken out the highs from FOMC. I think that it's definitely likely that we could run that up this week. And again, I think it would be ideal to enter somewhere in this range that we've been consolidating on in the lower portion of this range. I mean, I think for, many days now it's been pretty consolidative. And then the 1 hour bullish engulfing 1 hour candle off of a bull flag formation. So again, I think that is ideal. If we get some kind of a pullback in the beginning of the week, that I would be ideal to get some kind of an entry below the 50% retracement on the Fibonacci's, and then ride it up to the high from FOMC. And then moving on to the lower time frames, like the 30-minute, it's still exciting, that same continuation. So I'll move on to the dollar now. They won't let me on. I wonder. So I was looking at it on my Top Step funded account, just on Top Step X, but they don't have the dollar on there, so I have to go on to TradingView. So apologies, please bear with me as I get there. Okay, the dollar has also been selling off over for the months. Down over 3% on the month, on the week. Slightly positive. So it's also, I'm going to imagine a consolidated vary on the daily. Yep. Very tight range that we're in here. See if we'll break out to have any sort of movement, or if we'll reject down. But yeah, as of right now, if we can, the main thing I want to see for the dollar, I don't look too deep into it. I just usually check the weekly candles. I always keep an idea of like if something like this could happen, where we've been seeing this, where we get a break above for a week, and then we just sell off down. So something to consider. We did that here, and now we're having the same setup here. So we'll see if it happens again. But again, I don't really go too in depth on the lower time frames on the dollar. I just try and look at the big picture for that, just to get a general sense. I really just trade ES and NQ. Okay, so we're done looking at those. Oh, and then the VIX. I forgot about the VIX real quick. It's selling off down. So we're down to 19, broke below the prior week's low. So the VIX is much lower now. We were spiking up there pretty high, up to like 30. So I think the volatility is starting to simmer down a little bit. Definitely with that consolidated state, we'll see. We'll see what happens this week. Now diving in. Monday, March 24th, 2025, we have economic data release. S&P Flash U.S. Services PMI of March 2025 will be released, and measures the activity level of purchasing managers in the services sector. S&P Flash U.S. Manufacturing PMI March 2025. Now, I believe this is all going to be at, I want to say 6:45 or so. I'll have to double check on Monday morning, or I'll have to double check on those. And then we have KBO earnings report. So it'll give us an update on the home deliveries and the insights into the housing market. Tuesday, we're going to have economic data at 9 a.m. Eastern. S&P Case-Shiller Home Price Index for January provides data on home price changes reflecting housing market trends. At 10 a.m. Eastern Consumer Confidence Index of March 2025 measures consumer sentiment regarding economic conditions. At 10 a.m. Eastern, new home sales of February 2025 offers insights into the number of new constructions homes sold, indicating the housing market health. So we're going to get some fairly volatile data in that morning session on Tuesday. And then after the close, we have GameStop earnings. So I know many people always love watching GameStop. Investors will watch for updates on profitability and strategic moves into the new markets. I know they're definitely trying to shift more online. We'll see how they go. Wednesday, March 26, 2025, economic data release at 8:30 a.m. Eastern. Durable goods orders February 2025 indicates new orders placed with domestic manufacturers for long-lasting goods reflecting manufacturing sector strength. So this is going to be something interesting when it comes. It's not always the biggest volatility for the NASDAQ, so it's just something to consider. And then earnings report before the market opened, we got Dollar Tree, insights into the performance amid economic fluctuations and consumer spending trends. So Dollar Tree is definitely a more cost favorable retail location, so you can see how they trend during recessions. And then Thursday, March 27, 2025, economic data release at 8:30 a.m. Eastern. Gross domestic product, GDP Q4 final estimates reflects the annualized change in the inflation-adjusted value of all goods and services produced by the economy, indicating economic health. This will be pretty large, so I think this one will move the markets. And then at 10 a.m. we got pending home sales for February. So this is going to offers a forward looking indicator of the housing market activity based on contract signings. So it's something that will be moving the market on Thursday. And then earnings report after the close, we got Lululemon and Chewy. Friday, economic data releases on Friday, March 28th, 8:30 a.m. Eastern. Personal consumption expenditures, PCE, is going to be the index on for February 2025. It measures the average increase in prices for all domestic personal consumption. It provides an insight into inflation trends, and the Federal Reserve really looks at PCE. So this is going to move the market big, I think. I think this will move the market massively. And then we have 10 a.m. Eastern, Michigan Consumer Sentiment Index, March 2025 final, assesses consumer confidence in economic activity, serving as a leading indicator of consumer spending. So my recommendation for everybody, even though there is no financial advice being had here, it's just for entertainment purposes only, I encourage you to monitor these events closely for informed trading decisions. That's really all. Just stay up to date on what's happening. You don't want to be in a trade and then all of a sudden you don't understand why the market's going up or down 400 points on the NASDAQ in 30 seconds and there's no liquidity on the books. It's going to drive you nuts. So just keep an informed idea. I like to use Financial Juice. It's totally free, and you can just keep an idea of when everything's happening. Please join the live stream tomorrow at 6:30 a.m. Eastern. 6:30 a.m. Pacific time. Monday through Friday, I do live stream all of my trades for free on YouTube. So please like and subscribe if you like the video. Come join the live stream tomorrow morning. There are links in the description. They do help out the channel, so come check it out. Follow me on Twitter at Sailboat Trader. So I do hope you all have a profitable week. I hope you all had a great weekend, and hope to see you in the stream tomorrow. Thanks so much. Bye-bye.